brand new year, but same old volatility. The PSE index managed to flip late in yesterday's session, with foreign funds becoming net buyers at the close. Most counters also ended the first trading day of the year in the green, except for financials, which fell flat at the end of session. So, what now? Certified investment solicitor Melvin De Vera from First Metro Asset Management is here with us to try and make sense of global markets in 2017. This, of course, includes a short review of 2016. Happy New Year, Melvin.
Happy
Thank
New
you
Year,
for
Sean.
joining us. Okay, let's look at a lot of uncertainties. Well, we're just coming off from that package from Michael McKee, and he points out that there could be more Fed hikes than the 3 that we are expecting, or there could be less. So this all depends on Trump's policy moves, right? Yeah. Also, there's a lot of rigodon happening even within the U.S. Fed. They're going to put in new governors. Trump will be appointing 2 governors, I believe. Also, in the Eurozone, we have a bunch of elections since we still have the Brexit. Are any of these risk events particularly threatening to you in this, coming from the Philippines?
We know that this U.S. reflation and as well as the Fed hikes is going to affect our market. If we would review our PSEI, 2015, it dropped 4%, and then just this year, 2016, it dropped 1.6%. And we could note that there had been Fed hikes also in these 2 years, right? So actually, the 1.6 drop this 2016 was second since 2008. And we can note as again that 2015 and 2016, that there had been Fed hikes.
Do you think these back-to-back, so 2016 and 2015 both ended the year in the red. Now, the last time that happened when we consecutively ended years in the red was 2001, 2001, and 2002. Now, what does that tell us? I know you like watching trends.
Yeah.
Should we prepare for a good market year or a bad market year? Because we've been hearing different things from different analysts also.
Yeah, if we look at the trends, like for every 5 years, we could see that there's 1 bad year and 4 good years in between. So I believe one of the bad years was 2013, and we're still on the 2017 coming. So we can still have a positive outlook on this 2017 going to 2018.
Okay. Well, like I said yesterday, banks ended the day pretty flat, so the financial sector. Now, we've been talking about this even before the holidays, that higher interest rates could indeed affect the personal and corporate loan growth of local banks. However, you still like banks. In fact, amongst your stock picks that you were telling me earlier, you still like BDO, BPI, and SECB.
Yeah.
Why is that?
First, we could also anticipate there will be a good volume of business for these banks this coming year, especially that our president is aggressive on its plan on infrastructure spending. And we can also review that our loan-to-deposit ratio of the banks is still at 0.68 times, which is lower than the peers, in the regional peers as we can compare.
And also, I guess President Duterte, I think he wants to fund a lot of the loans domestically as much as possible. So is that what you're looking at as a fill-up to the banking stocks looking forward? That said, how do you feel about infra stocks?
Well, since there will be a good infrastructure spending, so this will be there will be a good growth on these stocks. So I'm seeing bit bullish insight is 2017 on that.
Okay, if I can call up this graph, so you gave me your top picks, and these were your basically the best gainers from 2016. Amongst them, of course, San Miguel Corporation, massive gains over there. Petron as well. So what is it about these 2 stocks that you like? Now, there's a lot of things happening with San Miguel. They're expanding their food business. They're doing another bond offer. And then Petron, what with oil prices going up, I guess this is what you're looking at, bigger revenues.
Yeah, bigger revenues.
So that's just it for these 2 stocks.
Yes.
You also like, again, the banks, and apart from the banks and these 2 stocks, you also like Metro Pacific, Aboitiz Equity Ventures, and SM.
Yes.
So why these 3 amongst the others?
First, they have a good synergy of businesses, and we see also that especially this had been performing last 2016, and estimates on their EPS growth are double digits on the next 2 years.
So
I'm
you're
looking-
basing all of this on EPS growth
EPS
over the
growth.
next 2 years.
Yes.
Now, what do you say? Because a lot of people have been saying that they're really watching corporate earnings because if we're starting to flatten a little bit, do you think we will flatten this year, or do you think we will continue to grow in the double digits?
It will continue to grow on a double digit.
Oh, you sound very bullish on that.
Yeah.
What are you basing this on?
Well, we can look at the trend of the earnings. We can see that there could be some months or quarters that they may not be publishing good, but
On the whole,
on
yeah.
the YTD,
It's still
it will
very
be
good.
picking up. Yeah.
Okay, well, if there's winners, then we also have losers. And if actually these are not like randomly picked, there actually are
Yeah.
year to date. Well, for the fiscal year 2016, these were the worst performers. As we can see, double-digit declines
yeah.
also. Okay, headed by
Jollibee and
URC, Emperador, and LTG. Can you talk us through these stocks?
Sure.
And what are, if ever you have a different outlook for these stocks in 2017?
Well, as for 2016, these are, as we noticed, they belong all in consumer sector. And like Jollibee and Rubina, as well as Emperador, they may have benefited during the election spending, but their earnings would have been hit by tougher competition as well as higher input costs. You know that peso weekends versus dollar as well as oil price hike. So this had been the challenges for
these
consumer
companies.
stocks. Yeah.
So basically, consumer stocks, you think, will continue to suffer because of the higher peso or the higher dollar and the weaker peso, as well as more expensive oil this year.
Yes.
Definitely. Okay, and my last question, we're taking some sort of informal poll over here. What is your year-end forecast 2017 for the PSE index? Where do you see it?
For the first quarter, I would see it more to be green, especially that dividend plays are coming in on the first quarter. So the volume of buy will be more on these January, Feb, and March. If I also be reviewing the seasonalities of the index for the past 5 years, we can note that on the first quarter all the way to April even, still on the upside.
Pretty much green,
pretty
yeah.
much green. And then we start to get reds on May as well as August. So
Ghost month,
Ghost
yeah.
month. But I'll take it more as a buying opportunity when it comes to August. So I'll do some bargain hunting or catching some falling stocks, trying to catch them at the bottom.
Okay.
Bottom peaking.
Okay, that said, where do you see the index level at year end? Fearless forecast. We know things can change.
Yeah, perhaps lowest 6.8 and a high of 7.5.
6.8 to 7.5.
Yeah.
Fair call. Thank you very much for
Thank
joining
you,
us, Melvin
Sharon.
De Vera from First Metro Asset Management. We're going to go on a short break, but after